So, Melissa, I just caught up with Susquehanna's Chris Rowland, covers the name. Listen, he notes that gross margins actually did go up in the quarter, a sign they're mixing out lower priced products. Notes stronger businesses like networking perform better. But bottom line, Chris Rowland want to know more about these macro issues that the company's now flagging here, why they just lowered full year guidance by about $2 billion. CEO Hock Tan addressed those issues right off the top of the call. Take a listen.
With respect to semiconductors, it is clear that the U.S.-China trade conflict, including the Huawei export ban, is creating economic and political uncertainty and reducing visibility for our global OEM customers. As a result, demand volatility has increased, and our customers are actively reducing inventory levels to manage risks.
Now, one of the first questions in the call, Melissa, was analysts asking Hock Tan, could you help quantify Huawei's impact a bit more? And Hock Tan saying Huawei did represent about $900 million of revenue last year. But the guide down he's given, and he made this very clear, was not just because of Huawei. It was not one customer, not one company, but broader, really, macro uncertainty. That's what they're looking at. He did try to give some positive colors, said, listen, fundamentals of the business are intact, said they're positioned very well for 5G. But you can clearly see the reaction there right now from investors. Guys, back to you.
All right, Josh. Thank you. Josh Lipton in San Francisco, down 8.5% right now, Dan.
Yeah, I think this really highlights the fact that we're not seeing the tariff effect on finished goods right now. We're seeing it in the supply chain. We're seeing the disruption. When you think about who Broadcom's biggest customers, we know that Apple is a 20% customer. We know that Huawei is a big one. And this is probably one of the first reverberations that we're going to start to see. And get ready for these sorts of announcements in July when companies are giving forward guidance, on their Q2 calls. And if you're not expecting a positive announcement to the China deal, this is going to become more. We're going to see them more often, and you may even see some pre-announcements in the next few weeks.
By the way, we're seeing weakness in the semiconductor shares across the board pretty much in the after-hour session. So this is how it starts, right? You have one company guide lower, then you have another guide lower, then you have another guide lower, and then people start worrying about Apple. That puts pressure on Apple, and et cetera, et cetera.
We've seen just add one more thing to the pile of concerns here, and then just add to it. We're seeing the semiconductors reduce inventory in response to the trade war. What we're seeing in other companies is they're actually trying to buy a whole bunch of stuff before more tariffs go on. So you might have the sugar high effect in one part of the economy, but I'd watch the semiconductors because they are the leading indicator of the global economy.
Well, is Broadcom and other semi-stocks set to roll out 5G? Could the chips be set to rip higher? James Wang, an analyst at Ark Invest, covering all things semiconductors, artificial intelligence, next-gen internet, and more. He joins us here with more. James, great to have you with us. Thanks for coming back. I first want to ask you about Broadcom and what you thought of the results. And it was clear that it was not just Huawei. What else do you think it is? And should investors be worried about Apple, which is a major customer?
Yeah, if you read the comments, it seems like mostly China-focused, and the comments are basically cautionary around macro. We've never been big on Huawei. To us, on Broadcom, it's always been an operator's company. This is all about rolling up companies and squeezing out efficiencies. We're more interested in our funds to invest in companies that are growing and actually creating opportunities. Companies like AMD and Xilinx, who are much more in control of their own fate. You don't see companies like AMD, for example, printing down because they're still relatively small. In a tough macro environment, when you go for smaller players, they can grow despite a macro headwind.
Still, macro still hits everybody, right? I mean, the concerns about China hits a lot of chip companies no matter what. And so what are some of the extrapolations that you might make?
I don't think it hits everybody to the same degree. I think the more mature you are as a company, the harder it hits you because you're more correlated to GDP growth, more to trade. If you look at some of the younger social media companies during 08, 09, they just grew right through it. Apple, you couldn't even tell they were having issues. So we're looking for companies that's building products that are more macro agnostic, that don't have a 3-5% revenue share or hit from a Huawei situation.
So from your standpoint right now, what are the major drivers, or what is the major driver in semiconductor growth right now?
Topical is 5G. I think it is important, but we don't view it quite as a disruptive innovation. I think the disruptive phase was probably 3 or 4G. It's more like a sustaining innovation in that classic parlance. We think AI is actually going to be a very sustainable trajectory for the next 3 to 5 years, and even beyond that. I just gave a presentation earlier this week in CogX in London. I'm tracking over 60 companies building AI chips. I think that's going to be a very productive field.
How should we think about the U.S. is obviously the major player in AI, but China is pretty big as well. So how should we think about China's contribution to this sort of trajectory of growth when China's trying to really focus its efforts on its own semiconductor industry, the possibility that China might be building its own AI chips?
They're certainly doing that.
Yeah.
So I looked at all the venture capital invested in the field of artificial intelligence chips. 40% went into Chinese companies.
Wow, 40%.
35% went to U.S. companies. So for the first time, despite the U.S. having the name Silicon Valley, more money is being pumped into silicon for the most important chip architecture, you could argue, than it is for the U.S. And that's mostly to a company called Horizon Robotics. So definitely China, I think this trade war, they've already felt it, right? They wanted silicon and semiconductor independence from the U.S. for a long time now. AI is actually a great reset point because the classic players who typically control this industry, Intel, with the x86 instruction set, they're not in the driving seat anymore. AI is built on top of frameworks which are instruction and chip agnostic. So China actually has a chance to be in the driver for this industry.
So how do you factor that into the companies that are here in the U.S. semiconductor companies that investors are saying that's the way you have to play AI if you're not thinking about the possible rise in China in a matter of years potentially with their own AI chips?
I think it's a little hard to tell. We're certainly considering the possibility you end up with two scenarios. The AI companies out of China serving the domestic market and the U.S. and some of the European companies serving the rest of the world. It remains to be seen if globally other customers will be willing to take Chinese AI chips. They still have to prove themselves. They're very early in the software process. I don't think they're quite there yet.
You can be in a Huawei ZTE kind of position, right,
Exactly.
with that industry.
Exactly.
Okay, James, always great to have you. Hope you'll come back. James Wang of Ark Invest, who covers semis there. Tim, what do you think?
Who makes complicated stuff sound really interesting. So that's good for James. And back to Broadcom. Look, this is a company that's going to have $10 billion in free cash flow in 2019. It's a company also that we talked about silicon. I mean, the 200, 400G silicon ramp is still a big, big deal for them. And Huawei's only 3 to 4% of their revenues. I think Apple may be a bigger deal than Huawei in the short run. But I like Broadcom here.
I'm more concerned about what they're talking about, what Dan's talking about for the economy at large, right? This concern that they have for the second half of the year in trade war. And I think, unlike last time, unlike in the fourth quarter of last year, where things turned around pretty quickly, I don't think the talk of a deal in the works will be enough to restore confidence, enough to restore spending. I think it will have to be a done, signed deal before companies get comfortable again, being aggressive.
It does feel like market participants get inured, right? So every single little development,
and any
like
tweet
things are
will have less and
progressing.
less effect.
We've heard that before.
So James brought up AMD, which has actually had a fantastic year. Looks like there might be, just from a trading perspective, it's at a double top potentially, right? So the way you trade that, at least for me, if you like AMD and you want to go with what James is saying, smaller company, you wait for a pullback to 30, you use maybe 29 as your stop and look for it to break through the double top.
Yeah, I'll just mention this. So obviously Broadcom is getting hit hard in the aftermarket right now, down 7%. I think you want to talk about Xilinx, which was a huge market leader within this group, is down 30% from its recent high since they guided down. And then we have, obviously a lot of bad performance. Nvidia, past leaders in this space, have broken. They're still up on the year, a lot of them, but they're broken. And so if we get more headlines like this, I'm expecting other legs lower in the space.